What's up, traders? In this video, we are going to be continuing our discussion on how to make context-based decisions in your trading. So stay tuned. To do this, we are going to be looking at another case study, but this time I'm going to be performing a trade recap on this counter trend short trade that I managed to get involved in on gold this past week. And one of the main reasons for why I decided to place a sell limit order in this area specifically was because of the context in which this trade setup presented itself in. And in today's video, I want to explain those thoughts that I had in order to show you guys how this applies practically. Now, before we dive into this case study, I just very quickly want to preface this by saying that if at any point during this video you feel overwhelmed or you feel as though this is complicated and too complex, I want you to understand and I want you to remember that I have been following the markets and I have been trading for many years. This way of looking at the context of a particular trade setup in conjunction with an established rule-based approach for finding a trade is not something that I developed overnight. It is effectively a skill that I have managed to hone over a very prolonged period of time, having experienced many different trading situations and many different trading conditions. If you're starting out or if you're fairly early on in your trading journey, there is absolutely nothing wrong with keeping things as simple, as straightforward, and as mechanical as you possibly can, because ultimately you want to be making sure that you can execute consistently in the markets every single day when you get to your charts. And the best way to do that is to have a mechanical approach. Now, I got tagged into this trade in this area here on Thursday, the 24th of October, 2024. I took partials in this area on Friday, the 25th of October, 2024, and I will be explaining reasons why I decided to take those partials. And then a few hours later, the remainder of my position was taken out for break even at this point in here. And in order to explain how I managed to spot this opportunity, I'm going to use the bar replay tool here on TradingView, and I'm going to pull price action back to Thursday, the 24th of October, to the time at which I got to my charts in the morning, which was roughly an hour or so before the London Open. I'm going to now drop out from the 15-minute time frame to the 4-hour time frame in order to explain effectively where price was at the time that this trade setup came about. Now, as you can see, my 4-hour time frame here on gold is bullish. In fact, we have been in a fairly prolonged bullish rally here on gold for the last few months, with price action consistently putting in new all-time highs almost every single week. And this past week was no different, as we saw price coming in to flirt with the 2760 level in here. Now, as you guys can see, my last bullish 4-hour external break of structure is in here. This is the location of my 4-hour strong low, as this is the starting point of the impulsive phase, which generated that break of structure. But the interesting thing about this particular price delivery in this area is the fact that we have this prolonged 4-hour internal impulsive phase, which has effectively resulted in the formation of a very large 4-hour internal range. Our 4-hour external strong low was at the same position as our 4-hour internal strong low, because both of these breaks of structure effectively originated from this point. Now, this meant that one of two things was going to happen in this area. Either we were going to see a resumption of this strong bearish pressure which entered the market, which could potentially push price down towards this 4-hour demand zone before a bullish resumption, or we would see an immediate violation of this 4-hour internal weak high in order to facilitate a resumption of this 4-hour impulsive phase which is taking place. Remember, even though we have such a large bullish 4-hour internal range, that 4-hour internal structure is still facilitating the 4-hour impulse, because that is the relationship that exists between our internal and external structure. And this is where, at the start of the day, I started looking at the context of the market, and I started looking at the context in which price action was trading. If I draw your attention to this psychological evil handle number here at 2750, you'll notice that price action came into that price point. We had what can only be described as a bullish rejection of that price point, and then we had the introduction of very strong bearish pressure out of that area. Now that bearish pressure coming out of that area is what allowed for the establishment of our 4-hour internal range. If I drop down to the 15-minute time frame very quickly, which is the internal of my 4-hour time frame, we had our internal structure shifting from a bullish market state to a bearish market state in here. And once that 15-minute internal structure shifted after price reacted to this 2750 level, that was the point at which I went ahead and established my new large 15-minute bullish range like so. And if we specifically pay attention to the bearish impulse to the downside, which generated that 15-minute internal shift, we can see that right at the origin point of that impulse, we have this 4-hour supply zone. And within that 4-hour supply zone, we have a refined 15-minute supply, which sits right at the extreme. Hopping back to the 4-hour time frame, you can see that that 4-hour supply is effectively the single bearish 4-hour candle. So what we now have is a strong bearish reaction coming off of a key psychological even handle number in a market that has been printing new all-time highs almost every single week. We have a very clearly defined 4-hour demand zone that this particular bearish price action can look to target if indeed this bearishness is to continue. And so now in this area, we have a 4-hour supply zone that potentially offers a counter trend opportunity to trade that bearishness down towards this 4-hour demand zone. So the very first thing here is that we effectively have a short-term directional bias, which is bearish, but we understand that this is a very high risk directional bias because of the current market that we're trading within. Now, focusing in on our price delivery in this area, we can see that we have very strong, high momentum, bearish candles coming out of this psychological even handle number. And at the time of performing this analysis, we have fairly low volume, bullish price action currently giving us a retracement. This is better seen on the 15-minute time frame, where we can see an almost immediate drop to the downside and a fairly slower, more corrective pullback that is currently taking place. Now, the reason I point this out is because as I was looking at this price delivery, I was trying to weigh up and determine the probability associated with price action coming back in to retest and mitigate this 4-hour supply before we saw a resumption of this bearish price action. Now, as I was asking myself this question, I noticed that there was potentially a continuation pattern that was forming in this area as price action was coming off of this psychological even handle number. And that continuation pattern is sometimes referred to as a bearish flag. Effectively, what you have is you have a very aggressive drop in price from a significant area, a fairly slow and steady retracement period before a drop. Other traders will also refer to this type of price delivery as a 1-to-1 equal measured move. Now, this is a continuation pattern that many traders trade exclusively. It is not a pattern that I trade at all, but it is a pattern that can help with understanding the nature of price delivery. Because what you need to remember is price delivery is effectively just the nature in which price presents itself on the charts, and that nature is effectively a pattern. So whenever someone refers to the nature of price delivery, effectively they're referring to a specific pattern of price action that they have noticed in the past, and that is effectively what I was looking at in here. Now, the key thing with this type of price delivery is that very rarely do you see that slow and steady pullback period come all the way back up to the origin point of that initial drop. More often than not, that very slow, low volume pullback will only ever come to around about the 50 to 61.8% retracement level of that initial drop before we see a continuation. And so having noticed that we could potentially be seeing this type of price delivery in this area, I noticed that we had these buy to sell wicks that price action was coming in to interact with. Now, this is also a variation of a supply and demand zone, but it is not one that I tend to trade very often, if at all. But in this scenario, in the context of this price delivery, I then spotted that there was a potential sell opportunity in this area because of the possible formation of this pattern. I am not trading the pattern. I am noticing the potential price delivery and how that potential price delivery, how that context can afford me a potential trading opportunity in here. And the reason I say that I'm not trading the pattern is because if I drop down to the 15-minute time frame, you'll see that I have a valid 15-minute bearish internal break in here. After that break, I have an internal pullback taking place. Not only do I have an internal pullback taking place, but the 4-hour supply zone that I have marked out sits at the equilibrium of this specific 15-minute bearish internal range. And so I am anticipating the possible formation of a bearish flag based off of this large drop and this low volume pullback phase. But I am also at the same time seeing a potentially valid trade setup in here that forms part of my trading plan as it relates to seeing a break of structure, identifying a POI that is well priced, having the relevant imbalance and liquidity present below, and then looking to trade in the direction of that break of structure. That's effectively what I'm doing here, right? My trade setup has been met. This little liquidity pool that sits in here, which is best seen and best explained, if you will, on the 3-minute time frame, because we have this 3-minute supply zone that could potentially be enticing a few traders into the market. And as you can see, we did actually have a short-term bearish reaction coming out of that area, which meant that this was definitely a liquidity pool for us. Overlapping this 4-hour supply, we have this 15-minute inside bar candle in here, denoted in white, that I also view as a valid POI. For those of you who are interested, the specific indicator that I use to show my inside bars is the inside bar indicator by CMA on TradingView. Now, not only did I like the fact that this 15-minute supply zone was overlapping my 4-hour supply, but I also like the fact that the open of that 15-minute supply zone sat at the midpoint of my 4-hour supply. And so once I saw that 15-minute supply, I removed my 4-hour supply, and then I placed a limit order at the open of that 15-minute supply zone at 2735 even. So now I have, according to my trading plan, a valid 15-minute supply zone that is well priced within this bearish 15-minute internal range that offers me a potential counter trend sell opportunity to trade not only this 15-minute pullback phase that is taking place, which was effectively signaled by my 15-minute internal structure shifting bearish in here, but that also allows me to potentially get involved in the bearish pressure that has entered into the market as a result of price action rejecting and effectively failing to break and close above this 2750 even handle number with any real conviction. Now, I want to stress that there is absolutely nothing wrong with identifying this as a potential counter trend opportunity and then focusing on your 4-hour supply zone in here, because this 4-hour supply zone is effectively the POI that helped generate the start of your internal pullback. So you could either place a limit order directly on that 4-hour supply, or you could place a limit order at the refined 15-minute supply zone, which sat at the extreme. So my sell limit order was placed at 2735 even. I placed my stop loss at 2744 even, and then my overall take profit target was at this 15-minute internal weak low at 2708.75. Now, after getting tagged into the trade, price action continued to interact with 15-minute supply. In fact, we saw a break and close above 15-minute supply. Price action stopped just short of hitting my full stop loss before a nice bearish reaction out of that area. Now, the full break and close on the 15-minute time frame can actually be seen as a wick violation effectively on the 4-hour time frame. So you can see the price action wicks above that area here with this 4-hour candle before we see that bearish reaction. And so we can essentially see the price action was sweeping this area to grab some liquidity. And this is why I always like to give whatever POI I'm trading from some breathing room in terms of my stop loss placement, because you never really know how much liquidity price action is going to sweep before that move takes place. Sometimes it doesn't sweep any liquidity. Sometimes it just taps and goes. Sometimes it hovers around that POI before trading lower. Sometimes it takes you out before trading down. All you can really do is identify what you believe to be a relatively high probability area to trade from and then trade accordingly. As we can see, at this point, our microstructure shifts from a bullish market state to a bearish market state. And we have this 15-minute supply zone that effectively led to that microstructure shifting from bullish to bearish. We have imbalance that sits just below that area. We also have liquidity that sits just below that area in the form of this inside bar candle, and that inside bar candle we now know is potentially going to be an area of interest that traders are going to be looking to trade from, and so that is why we view that as potential inducement. This 15-minute supply zone now would have been an alternative entry point that you could look to get involved in if indeed you chose not to trade from this area directly. Now, unlike this initial 15-minute supply zone, on this second 15-minute supply zone, we only see a very slight tap mitigation of the open of that POI before a nice strong bearish reaction off of that area. And one of the things that we can attribute to that specific bearish reaction coming out of that area is, if we hop out to the 4-hour time frame once again, reminding ourselves that we did indeed see a sweep of liquidity in that area before that 15-minute supply zone formed. So my overall take profit target was down here at my 15-minute internal week low. We have now transitioned into the next day, Friday the 25th of October, and at this point I still had my full position on and I still had my stop loss in its initial position. I chose not to take a scale-in trade in here purely because I'm trading counter trend in a market that has been overwhelmingly bullish for the last few months, and I just felt that taking another sell opportunity in here was an unnecessary risk. However, if I did not take this initial sell trade, I would have taken this one here. Now, a few hours into the London session of Friday the 25th of October, we saw price action coming in and sweeping this Asian low liquidity pool of Thursday the 24th of October. But not only did we see a sweep of that area, we also saw a bullish reaction coming out of that sweep. As soon as I saw this price delivery in here, I then saw this as a potential early indication that a bullish rally was on the cards. Because remember, at this point in time, we are trading a heavily bullish market. And as much as we have seen a strong bullish rejection of this 2750 level, price action could easily look to come back, retest this area, potentially even come back and mitigate our initial 4-hour supply. And so I was very mindful of the fact that the underlying volume of this market was extremely bullish. And so once I saw that bullish price delivery, I decided to take partials in this point here, precisely at 2721.13. Not only did I take partials in this area, but I also moved my stop loss to break even just to ensure that I was now risk-free on this trade, just in case we did in fact see a strong bullish rally coming off of this liquidity sweep in here. After taking my partials, price action did try to rally lower but failed to do so, and instead, as anticipated, we saw a strong bullish reaction coming off of that liquidity sweep, which ended up closing out my remaining position for break even here at around about my entry point 273500. And so now at the time of recording this video, we can see that the market is closed, but price action is now approaching this 4-hour supply as it is coming back in to retest that psychological even handle number at 2750. We can keep an eye on how price action comes in to interact with this area. By no means am I placing a sell limit order directly on that refined 15-minute supply zone. And the reason is because at this current moment in time, as I said, we have overwhelmingly bullish volume that is present in this market. But then also number two, I would actually prefer for price action to violate this area and to give us a new bullish 4-hour internal breaker structure, purely because that would allow for better separation of our external and internal price action. So a practical example of how I used a context-based approach in combination with my trading plan, which is rules-based, in order to spot and take this sell opportunity. It's going to be very interesting to see how price action comes in to interact with this 4-hour supply. And it's also going to be very interesting to see just how high gold can actually go before the end of 2024. Definitely feel free to revisit this price action for yourself. Feel free to perform your own analysis to see whether or not this was a valid trade setup for you. As always, I appreciate you guys so much for watching, and I'll speak to you in the next one.